in our YouTube. What's going on? Welcome to Wealth Wednesday. The time is now 8:08. All right, infinity, zero, infinity. I like that. I don't mind starting on an 8:08. All right, I had a really grandiose plan of like wearing my hat and stuff. I wanted to kind of pop this episode off the right way. So, I think I'll. What do you guys think? Should I wear this today? All right. Well, anyway, thanks for joining me. We are going to be discussing a pretty juicy topic today, and I think it's something everyone can relate to. So I'm gonna take this off hot. Something that everyone can relate to is what we're gonna talk about today. Quarter 4 is about to continue. We're gonna get results from quarter 3, which ended last month, and the outlook is looking scary, y'all. So let's talk about it. Let's go into it. If you guys are on our YouTube, feel free to join us on our StreamYard. We are sponsored by StreamYard. They are a free platform that allows us to utilize streaming services. So very excited to utilize them. StreamYard, appreciate you guys for what you do. All those who are looking to have like back office meetings and like YouTube live streams, definitely consider StreamYard. All right. So this quarter, I want to just talk quickly about what's going on in the news. Okay. I'm going to pull up my screen so you guys can see this on the StreamYard. Let me just make sure I pull that up. We're going to talk about what's happening outside because my job here is to really prepare you all for what's coming, not what's happening, but what's coming. I want to make sure that you're ahead of some of these stories and that you are aware that, this December, it's going to be a lot of chaos when it comes to, investments, how they're performing, when it comes to the economy. There's a lot of things going on. So let's get into it. So the first thing that I saw is this right here. So if you guys aren't on our YouTube stream, I'll read this out to you. Truckers, port workers vent as supply chain frustration mounts. A lot of us are willing to work. Okay, this was an article written on Tuesday, October 26th. Okay, and this is off of Yahoo News. Typically, I utilize Yahoo News to get myself access to the latest stuff. I'm just going to move this camera a little quick to get the latest information about finances as well as news articles. But this one I read earlier today, and I think it's very worthy of sharing because in order for you to invest for the future, you have to know exactly what's coming down the pike, right? Because all of our investments are based on future value, right? Based on us understanding what's happening in the markets, what's going on long term. One thing we talked about a couple of weeks ago was this glut at the ports where people aren't able to get their actual products and services off of the shipping containers and off of the boats that are there. What's going on, Suzea Firms? What's going on, Cherie? How you doing? Aunt Bev, what up? Mr. Major, what's going on, brother? Always good to see you. All right, so this article written by Danny Romero says the great global supply chain crisis of 2021, which has ensnared groceries, holiday shopping, and everything in between, has bottlenecked West Coast ports and drawn the involvement of the White House to address it. Remember, we talked about this 2 weeks ago. 2 weeks ago, we talked about this in our Wealth Wednesday episode about the fact that there's a glut happening at the ports right now and how that's going to impact your investments and your Christmas shopping, everything else. Okay, cool. As the disruption reaches a boiling point and adds to rising pressures, longshoremen, union representatives, and truck drivers have pointed fingers over which party is best positioned to alleviate some of the strains. Cargo ships afloat in the Pacific Ocean demonstrate the convergence of strong consumer demand and a widespread shortage of bodies to meet it. According to Goldman Sachs, over 30 million tons of cargo await delivery ahead of the Thanksgiving to Christmas rush. Essentially, workers are still scarce, but U.S. consumers are still in a buying mood, meaning the congestion is not expected to wind down until the second half of 2022. All right. So who exactly is to blame? Some drivers lined up at the ports of Los Angeles and Long Beach and have spoken to Yahoo Finance in recent days and have answered, not us. There is a lot of us who are willing to work, Carlos Ramirez, 25-year-old truck driver veteran, told Yahoo Finance, speaking from a nearby area where trucks were idled on multiple chassis have sat unattended. Ramirez blasted a reported driver shortage as the biggest excuse, and he said it's simply not true. Basically, drivers are sitting there waiting for cargo, but they can't move it because it's not coming off the ships in time. Anyway, I'm not going to read this whole article to you. If you want to take a look at it, again, this is on news.yahoo.finance. It was written by Danny Romero. And I definitely recommend that you guys start looking at these things, because this is what is going to make the difference in your portfolio. What's going to make the difference in your planning for Christmas time. And especially when it comes to like looking at next quarter, because when you invest, you don't invest for just today, you invest for today, and you have like, okay, what's happening over the next 3 months, the next 6 months, the next year, the next 3 years, 5 years. Like you have different time frames that you have to hit, right? So over the next 2 months, we're about to see a bottleneck like we've never seen before in this country. And if that means that you have goods and services that you actually provide that come internationally, like some folks have, their factories offshore, and that stuff has to be shipped in and has to be processed, put on a truck, sent in, right? If your business is relying upon logistics, then you have to be very concerned about the logistics glut that we see right now in the economy, because it's not going to get better unless policy changes around COVID-19 vaccinations. If that doesn't change, this problem is going to continue to persist, and there's just going to be a shortage of people trying to move products good back and forth. So Melanin Gal Tings, what's up? Thanks for joining us. Wong Tunes, what's going on? Thanks for joining us. Appreciate you. So this episode, we're going to be talking about, again, what to expect going forward when it comes to this, and just how to prepare, because it's one thing to see something happening. It's another thing to know how to handle it, right? You got to know how to handle this. So let me close out this window real quick. For all those who don't know who we are The Way. We are a nonprofit based out of New York City. We have a website where we actually utilize it for our podcast, but also it's going to be the place where we're going to start getting a lot of folks in to our financial literacy course. So if you've never seen our website or know who we are, if you're on our YouTube stream, you'll see that this is our website. It's called theway.com, and the E has an accent aigu on it. So actually, we're one of the first people to put an accent in our URL. So, we're kind of ahead of the curve on certain things, which is fine. But the moral of the story is that we're trying to continue to build out our financial literacy program. We actually have some students enrolled right now who are having some amazing breakthroughs. We had a really good breakthrough yesterday with one of my students. And, this person left this meeting with a new vigor. You know what I mean? We were doing watch lists. And again, the moral of the story is that when you're through the program, the goal is for you to be savvy enough financially to know how to invest your money, what's comfortable for you to invest, how to save, how to consolidate your debts, how to understand your balance sheet, how to understand your income statement, how to understand your statement of cash flows. Like, it gives you the basis of how to become an investor so that you can understand for yourself how to do this the right way, so that you can then take that mission and move it forward, right? So for us, our goal is to give away this stuff for free, make sure that everyone understands where they can find this information. And again, this is who we are. We are here to help. We're here to serve. There's a few major projects happening on the way that, pun intended, that I'm definitely excited about getting you guys into. It's something that I'm working with one of my buddies on, and we're going to be bringing something to you guys pretty soon. Maybe beginning of December, maybe the beginning of January. But the moral of the story is that we're going to be bringing some really, really cool projects your way. And I hope that you guys are ready for it. So that is all of that on the way. Let's get that window out of here and get back to our conversation. All right. So, folks, my wife asked me what I want to talk to about today. And I was like, let's talk about just planning, future planning. Okay. So 2 weeks ago, we talked about what's going to be happening with supply chain, right? How that's going to impact people. Okay, cool. We pop that out. So let's get a little bit deeper into that. Over the next, I'd say 3 weeks, because in New York State specifically, there has been a change in the law. So for any human services organization in New York City that is contracted by the city, you now have to have all of your workers vaccinated, right? And they're no longer accepting weekly testing as of November 2nd, I think. So that's not the only state that's doing this. This is something that's happening across many other states. There are a few states that are refusing these, sweeping across the board vaccine mandates, like Texas, just to name one. But for the most part, the way that New York moves, usually a lot of states try to follow that mandate. Okay, cool. So there's gonna be a lot of unemployed people over the next 2 weeks. And not to say that that is a good thing, because it's not. And it's not for the fear of, safety, because, actually in charge of the testing and all of the stuff and the COVID, stuff in my office, and I see the numbers, and a lot of folks aren't really contracting COVID in New York as they were prior months. Again, I think just because again, we have a lot of vaccinated folks here, we have a lot of folks with natural immunity. So because of all of these things, they're playing into the idea that we're just getting a little bit safer. So that's cool. However, as of November 2nd, that's going to be down the road, which means that there are going to be a lot of folks who are going to be unemployed, right? Now, this is not the only country, that's the only state that's doing this. This is something that's happening across the board. The education system has already had this mandate where if you're a teacher and you're not vaccinated, then you're going to be out of a job until you decide to get vaccinated and be in compliance, and so on and so on, right? So all of this is going to lead to an issue when it comes to supply and demand and when it comes to GDP, right? A lot of folks that are employed, again, during this time of year, they spend money, whether it's on Black Friday shopping, whether it's on Christmas gifts, all of those types of things. And again, if you have less employed people, right, that means that you'll have less sales, right? But on top of that, now you have less actual goods in the stores in the first place. And if you've noticed this, I don't know if you guys have noticed this, but have any of you tried to buy a car lately? Anybody? And if you have you noticed that there aren't that many new cars out there to be bought? Like most of the cars you're seeing are 2020s, not many 2021s, and definitely no 2022s. Have you noticed that? Okay. All of this is coming to a head, right? And I just want you to be ahead of what's coming, which is there is going to be a shift in the things that you have access to, whether it be because of employment, because of supply, or because of actually having the product logistically available, right? Because the supply could be there, but if the logistics aren't there to get it to you, still a problem, right? And it's going to shift the way that companies have profit statements for this next quarter coming up. Normally, the fourth quarter of the year, which is from September to December, right? The fourth quarter of the year is usually the quarter that a lot of companies make up for lost revenue throughout the year. Like it's literally their make or break year. We call it going in the black, right? I don't know why going in the black is like, that should always be a good thing, right? But when you get into the black, that means that you've made all the money that you're supposed to make. You've covered all of your costs. You're in the positives. You're good, right? So all companies usually have that moment in the last quarter of the year where they really ramp up a lot of sales, a lot of coupons or so, a lot of demand, a lot of stuff, Christmas, all that stuff. So this holiday season, without companies having the ability to utilize this ramp up of the fourth quarter holiday time to make their numbers, there are going to be a lot of companies that fall short of their numbers. And when a company falls short of its numbers, especially if it's a publicly traded company, stockholders start withdrawing funds from there because they think that there might be a reaction or retraction because you didn't hit your numbers this quarter. Well, that just means that you may not hit it next quarter. We want to pull some of our money back. I think that's going to happen. And that could trigger a huge market correction, which we almost saw over the last 2 weeks. We almost saw it. Other things have rebounded since then. I think if you were looking at some of your cryptocurrencies, you might be pleasantly surprised as to how they've been moving lately. But outside of that, a lot of people have been kind of waiting for that other shoe to drop, right? Let me pull up our Yahoo page, and I want to kind of give you guys something to think about. So we talked about currencies, okay. Options. Where's the crypto page, guys? I want to go see our cryptocurrencies. I want to go see our stuff. Okay. So you guys notice that Bitcoin's back at 58,000? Why do you guys, okay, not you guys as in you all, but I'm just saying in general, why do folks think that this stuff isn't like, why do you think this stuff is like a secret? Why do you think that Bitcoin that was selling at $32,000 a month ago is now back up at 58,000 and climbing? Do you think that that's a mistake? Do you think that that's just random? It's not random, guys. So Bitcoin was at 29,000 July 20th. And And y'all were like, oh no, the Bitcoin, I can't believe it was 60,000. Now it's back to. So if you played that right, you could have doubled your money again, which a lot of crypto owners did because they know what's happening. They want people to sell out so they can get back in, especially as things are getting worse. Try not to trigger happily sell things right now. If you own cryptocurrency, and then if you followed our channel, you know that we have a strategy that when your stock prices go down, you double down and buy more shares of it, right? We've talked about this for about a year now, okay? So for all of you who own Bitcoin, right? When you saw that price drop from $66,000 all the way down to $29,000, and if you followed our channel, that means that you know that that is your time to buy, right? It's your time to buy. Let me pull it up on my YouTube, folks, so you guys can see it. So we're looking at Bitcoin right now, right? You know that if it's, okay, crypto is the next wave of how funding is going to be in the future. Like, it is the most honest type of currency right now that exists because it's not predicated on a government. It's predicated on what I value and what you on the other side values, right? It's a peer-to-peer currency. We bring the value to it. So we're not going to be able to print extra of them. We can't raise the cost of it because we want to. No, it's going to literally be a supply and demand type issue. If people stop having faith in real currency, they're going to move completely over to cryptocurrency, and Bitcoin is the standard. Okay. I've said this many times. I'll say it again. Whenever you see a stock, an option, not even an option, a stock, bond, mutual fund that you know is a long-term hold, right? If it drops by half in value, always, I'm going to say the word always. That's not safe for me to say always now, but I'm going to say it. Always consider investing more money into it in hopes that you were right the first time you invested in that stock or bond or mutual fund. I was looking up a bond fund the other day that actually has been outperforming certain stocks. It's an ETF, and it's primed in a mortgage type of, background. It made 57% since January till now, right? All because of what's happening in the economy. People, doing certain transactions that are consistent because they want to, because of the way that things have been over the last, year, which I'm not going to tell you what it is. If you want to know what it is, DM me and I will tell you what it is, right? But I got to leave you guys with some type of mystery. But this mutual fund, literally the 57%, I found it yesterday. And I'm like, dang, like, I want to tell my viewers and my listeners that, like, these things exist. Not just Bitcoin does this. Like, a lot of different companies, mutual funds, stocks do this. But it's not about whether stocks go up. We know that. Or stocks go down. We know that. What this is really about is habits. And you creating positive habits when it comes to how you view investing. If you see money going down, if you see stocks going down, please do not consider just selling immediately. Like, ask yourself, if this thing was half price and I knew that it was valuable, how many more of them would I buy? Right? You've got to start thinking this way because you're going to miss out on a ton of wealth building opportunities if you don't do it like that. So Bitcoin went at $29,000, July 20th. And I remember July 20th. My wife's birthday was the 14th. I remember I had her on a boat July 20th. And we were talking about this. I'm like, yo, you guys, Bitcoin. If you actually go back to the episode July, you'll see that we talked about Bitcoin dropping, saying, hey, by the way, it's at 29,000. Guys, jump back in. Everybody start getting things at half price. We talked about this. So, like, when you see this, you could have doubled whatever money you had, literally, in the last 2 months, just riding Bitcoin, which is going to be around for a long time. So, not to give you guys kind of like, a cookie cutter way of solving every financial problem, because there's going to come a point in time where this is not going to work. There's going to be a point in time where you're not going to be able to see a Bitcoin go from 29,000, oh, I'm going to buy the dip, and then it's going to continue to rise to 61, 60. Like, this is not always going to happen. Like, this is happening because we are in a very volatile time. Volatile markets are usually the best time to make a lot of ridiculous gains, 50%, 20%, 100% gains. You can make that in a volatile market like this right now because there's a lot of flux. There are a lot of people that are afraid. When folks are afraid, they take their money out before they're supposed to. And then when they realize they shouldn't, they dump it back in. So there's a lot of transactions back and forth, which is why you'll see something like Bitcoin that should be very consistent fluctuating like this because people are emotionally investing. So I would say that take the emotions out of it. Just look at the numbers. Don't buy into the emotional aspect of, okay, if the stock goes down, that means I should take out of it. No, when it goes down, you should buy more of it to kind of lower your average cost of shares. Because if it all goes back up, guess what? You're winning on all of the shares to begin with, right? So that's the Bitcoin example. I'm actually, because you guys are nice, I'm actually going to show you how I found that stock. Okay. So on Yahoo Finance, and if you guys are following us on our YouTube channel, you'll see what I'm doing. And I want you to kind of walk through this for yourselves, because when you know how to do this, it makes you into an actual real investor. And that is a useful a useful thing to have in your feather cap. Okay. All right. So go to Yahoo Finance at yahoo.com. Go to Finance Home. All right. Now on here in the top brackets, you'll see something saying Finance Home, watch lists, my portfolio, screeners, markets, news, whatever have you, right? Go to screeners, right? And click on that. All right. This is how you find actual funds and things to invest in. I'm going to show you the exact path that I used to find this company, right? Cool. So create a new screener. All right. So we're going to say United States. It asks you building stock screeners with filters below. So it gives you a couple of filters that you can use in order to screen all of the potential companies, stocks. Yeah, you should be on YouTube, brother. If you click the link in my bio, you will see one of the recent videos that I did, but that's also on the YouTube channel. It's a previous podcast. Just click on the channel and then you'll get to see the live from there and you'll get to see the window. So yeah, hop on in and you'll see that. And if you have friends and people that are interested in learning how to actually pick stocks, because it's really hard to figure out how to do this, but I'm going to break it down in a way where if you follow what I'm doing, you can pick them and see them yourself in a way that's going to be easy for you to replicate, right? So if you can't check it out, you can just check it out afterwards, because I'm going to post it on YouTube anyway. All right, so we're in the stock screener now. Region is United States. Okay, cool. Market intraday. Okay, you can do that, but I want to do no, I don't want to do it this way. Here we go. Mutual fund screener. You can click that one. Aha. Okay. So we're going to do this for mutual funds first. All right. So exchange, NASDAQ. I'm going to put the New York Stock Exchange as well. All right. Cool. All right. So those are the two I picked there. So we're using the mutual funds screener. And I'll show you why I'm doing it this way. Funds category, pick a category. I think I want to pick something that is domestic and is majority equity. So let's do an allocation of 50 to 70% as one, and 70 to 85% equity. So basically what this is asking you is how much of them, because a mutual fund is a bag of stocks, right? And they could be, different types of stocks, income generating stocks, growth stocks, value stocks, whatever have you. But they're looking at what combination of that mutual fund do you want to have? Do you want it to be completely stocks and no bonds, or just, like that combination? So we're looking for 50 to 70% equity and 70 to 85% equity. So that's like a moderate to aggressive portfolio. Okay, cool. Looking for moderate to aggressive mutual funds. Cool. So I close that out. And then funds by company, we don't want to do that. So we leave that blank because we want to generate anything that we want. Morningstar performance rating overall is what that rating is. The Morningstar performance rating is essentially an organization that ranks mutual funds based on their performance. It ranks a ton of them. This is what they do. This is their job. They look at every mutual fund and rank them based on a five-star system. So 1 star means that it's really volatile, not as performing well. Don't risk it. 5-star is this is the best performing fund in its class, probably top 5 percentile. Definitely invest in this. Is a good thing. Okay, cool. So we're going to pick 5, right? And we're not going to have an intraday price greater than. We don't want to deal with that. So far, here's what I did, right? Went to the screeners page, went to mutual fund screener. Exchanges that I'm using are the NASDAQ and the New York Stock Exchange only. I want a fund by the category that has 50 to 70% equity or 70 to 85% equity. So that's a moderate to aggressive portfolio of a mutual fund, right? I didn't select the company that I want. I selected a 5-star, and then I say find mutual funds. All right, cool. So now I have a list of mutual funds that have had average rates of return over the past year to date. What I'm going to do is I'm going to sort this by the price. So we can see the cheapest ones going down to the highest ones. And then I'm going to look at the right side and I'm going to look at year-to-date returns. Okay. So if you're looking at my screen right now, you can see that we have a whole bunch of companies that have different year-to-date returns. And I'm going to start checking off anything that has a higher than 16% rate of return for the year so far. So we have IEFCX, that's high at 17.69% year return. This one's 17. Let's keep going. I'm going to make this some more rows. Let's go to 100 rows. That way we can see the whole screen. Okay, cool. This one is 15%, TILDX. That's a high income innovation fund. Okay, cool. I want to go 16% and higher. Fidelity Puritan Fund. Okay, cool. That's 16.2. 16.74 is T. Rowe Price Capital Appreciation Portfolio. All of these are 16 here. T. Rowe Price is a lot of 16% performers, which is nice. And again, this is how I'm screening. Now, Dodge X Cox Balance Fund had a 19% rate of return. Okay, boom. That one caught my attention. So check this out. We have, okay, so look up this ticker symbol, y'all. DODBX. DODBX. Dodge and Cox Balanced Fund. Okay. Now, here's what investors won't tell you, right? There are people who manage these mutual funds that literally it takes them hours of their day every single day for them to pick and choose which funds should be in there, which one shouldn't be. But remember, a mutual fund is just a bag of stocks. That's all it is. So if you clicked into one of these, let's go into Boston Trust, right? Yeah, I don't want the 16%. Okay. So Boston Trust Asset Management Fund, BTBFX. This is a different one. I'm going to open this one in a different window, open in a new tab, and I'm going to open this one here. Okay. So Boston Trust Asset Management Fund, this fund has okay, look at this year to date. So at the beginning of the year, this fund was trading at $55 and now it's at $65. Okay. High performing mutual fund, really low risk. A nice little rate of return, right? Mutual funds are basing the average. So they're going to make money based on how average returns happen in each of these stocks. But here's what I want you to do. Move over from the summary page that you see here, right? For BTBFX and go over to holdings, right? Click on that. Now, this page shows you what's inside of the mutual fund. It has 78% stocks, 20% bonds. That's the combination, right? And 0.72% cash. Cool. So it's very stock heavy, right? Okay. All I want you to do is scroll to the top holdings, right? You're going to see a list of companies there. Look at them individually and research them. Because if a company is doing 18, 19% rate of return, chances are the stocks that it has in the portfolio that it has the most of is going to be why it's moving as far and as high as it is. So why not go into the little mutual fund bag and pick out all the ones that were performing well in the bag? That's how simple sometimes things can be. Now, I'm not going to do the homework for you now, but I'll tell you the top stocks in this mutual fund are Microsoft, which had a 30% gain, Apple, Google, ACN, Costco, ADP, Nike, and Visa. All right, 10 companies. This is the most heavily weighted companies that they have here. And you can literally break it out and look at them and see, well, which one of these mutual funds did well? Which one of these stocks did well in this mutual fund? Visa didn't do well. They did fairly poorly, so it couldn't have been them. Nike, middle of the average of the road, but it didn't do well. ADP did well. Costco did well. ACN didn't do well. Google did extremely well. Actually went up by 4%. And Microsoft went up by 4%. So all you kind of have to do is look at these high-performing funds, break down what's inside of them, and pluck out the ones that you think might be useful. This is how you create a list that you can utilize to figure out where to invest next. Because some of you are going to be looking for deals, looking for, what performed well, what didn't perform well. Well, utilize the research of Morningstar, the research of other applications that you have that are free, like Yahoo Finance at yahoo.com. Utilize all these things and try to build yourself something where you can at least have in your face every day certain investment opportunities that can give you the rates of return that you want to see over the next year, 2 years, 3 years. But here's the thing. All this is good and gravy right now because, again, things haven't hit the fan yet. They're going to hit the fan, right? So no matter what you find, no matter how good it looks over the last, year to date, which is up until, October 27th, 10 months so far, almost 11 months. I don't care how good it looks so far. What it's going to do from now to the end of the year is not going to look like what it did from January up until now. So you have to really look at this and say, am I playing this for the long term? And if so, how do I manage the risk of what's coming next? So companies that are not going to be impacted by this are companies who are already offering services online, services that are already digital, that I don't need to hand you a physical product. I'm giving you a service via, the web, via internet, via, some sort of app. Like a lot of payroll companies are making a killing right now because they're providing value digitally. We talk about, changing the way that HRIS software, like HRIS is human resources information systems. That's been changing for the last 5 years. But recently, companies that have been web-based HR have been thriving because during a pandemic, all of your HR is going to be web-based. So if you look at companies that are doing that, let's look up one. Okay. And I have, let's look at Paychex, right? We're going to look at a few of them. So this company here, this is Paychex, 6 months. Look at that. We can pull any of them up. We're going to see this. So 6 months, this went from, let's do year to date. So year to date, Paychex went from $92 January to $122, right? Nice little chart. It went down to 86 bucks, but then kind of steadily went up. Very consistent, right? Not a huge gain, but again, they're moving into web-based, and I understand them. I know them. Okay, cool. Let's check out ADP. Same thing. These are all payroll companies, right? Let's go year to date. Look at the chart. All the same thing. Do you see this? Payroll companies that have been moving web-based, they are performing extremely well right now. Why? Because they are positioning themselves to having, their their customers able to utilize the services digitally. So it's not to say that you can't make money in a lot of different companies, but you have to look at the company's offering. What is it offering? If it's anything that's logistically based, you're going to have a problem over the next 3 months. If it's anything that is digitally based, you might be okay. So kind of look at these companies and start breaking down which categories and sectors they're in, because you're going to need to have access to that knowledge ahead of time before you start buying anything, right? Cool. Let's look at one more. So this one, they went from $168 to $221, right? Year to date. That's ADP, payroll company. Let me try one more, okay? I don't know if you've heard of these guys before, but same process. Let's look at them. Like, this is why I know enough of payroll companies to know what they're doing. So this is another one, Paycom software, right? So they went from January 1st, 441, and now they're at 531, went up by $100, right? That to me, again, is the exact same process. And you got to kind of look at how these companies are positioning themselves, right? This is a completely digital company. So all of that to say this, companies that are offering services that are online, chances are they're going to be better equipped to handle, what's happening next over the next 2 months, which is going to be a logistic glut, which is going to be a lot of companies not making their mark for the fourth quarter, which means Christmas shopping, Black Friday sales, all that type of stuff is going to be short. It's going to be shortages across the board. So let's get ready for this. It's going to be an interesting next 2-3 months. Start stocking up on food, stock up on water filters. I don't really recommend buying bottles of water because that's expensive and it's a waste of bottles. So really invest in really high quality water filtration system that you can have at your home. I have one that's called the AquaTrue, and it's a beautiful piece of machinery. We've been using that for the last 2 years. My wife actually found it. It saved us on buying bottled water. We used to buy maybe 2 or 3 packs of bottled water every week. Now we buy like barely 1 pack for the baby. So it definitely saves us a lot of money, especially when it comes to the quality of the water that you want. So definitely start investing in those things now, because when you're going to need this, you're not going to be able to get it. And that's my concern for all of you, is like, if you're going to need, water filtration and you can't actually get water, um, you're going to be stuck in a very Puerto Rico Hurricane Maria situation. And I don't want to see that for y'all. So I'm looking, just so you guys are on my YouTube right now. If you guys are here, you can see what I'm pulling up. So this is what I have. It's called the AquaTrue. So if you can see my screen, pull this up. This is the AquaTrue Connects countertop water purifier. Beyond filtration. This is, let's see, the picture pulls up. I don't know why my Wi-Fi is acting kind of slow today, but so again, know your water. 3 out of 4 homes in the U.S. have tap water containing contaminants that exceed safe water limits: PFAS, lead, chlorine, nitrates, fluoride, arsenic, and other bad things. So this is it right here, the AquaTrue 4-stage technology, how it works, talks about its features. Again, this is something that I've used and I understand it. Like, y'all need to really start investing in things like this, especially for what's coming next, because if you can at least guarantee that you have clean water along the way, not have to go to the store to buy bottled water, then you can start stocking up in the right things that you'll need. So like rice, beans, dry foods, all that type of stuff. The things that you really want, that you might need for in the case that something bad happens, get those things now. Get the sleeping bags, get the, the home help, the kits for first aid, get all the things that you think you might need, because things might go south faster than you think. All right, so this is the AquaTrue, y'all. And again, great reviews. I don't think there's gonna be one bad review up in here. This is their website, so chances are there would be a bad review. But I'll tell you, this is countertop water purifier, $449. So that's something I have in my house, right? So just know there's answers and solutions out here. All right, so folks, lastly, we got 15 minutes. I don't really have anything else to talk about. So if you guys can tell me what you want to talk about, we can talk about anything you want, or we can just wrap this up early. I don't usually end early, but I think today, the energy today for me is really, we need to prepare. How else can I say this without just saying it? Like, things are about to get very bad, and we've been, talking about all the ways to get around that, being prepared, having access to the right knowledge and the right group of people, the right community to, work with and to kind of start collaborating with. But yeah, the predictions aren't good right now, y'all. I mean, I don't have anything good about what's about to happen next. Like, I think the best thing that's going to happen out of this is that folks are going to really start to know who's who. And by knowing who's who, it's like, who's really for me and who's not, who's really trying to be about this change and who's not. Like, there's going to be a lot of things that come out, and that's going to be information about, what's going on with this pandemic, information about, where society is trying to take things. All of this is going to happen over the next 2-3 months. Like, it's going to be quick. And I just hope that you guys are ready. I hope that you've listened to us long enough to know how to position yourself. Like right now, I'm in the process of organizing myself personally in a way where by the end of this year, I'll be kind of primed and ready to take on any kind of opportunity that comes my way. One actually came my way this month, and I'm looking into it right now, but there are others that are ready. And it's like, okay, cash is king. So if you have the opportunity to save money, if you have the opportunity to start stocking up the things that you need, you should be doing that right now while there's still supply, while there's still opportunity for that. If you want to take vacations, take trips, all that kind of stuff, do all that now. Get that out the way now, because things are going to be changing very drastically. We talked about this, but it's actually coming closer and closer. And the closer and closer it gets, the more the warnings become like, are you going to listen? Right? So folks, start stocking up, start saving, start looking at your investment options, start doing screeners, looking at different mutual funds, figuring out what's inside of them, find the best things in there, pluck them out, put them on your watch list. Like start creating the rubric for what's going to happen next, because those who are prepared, they're the ones that are going to be the best suited for this rebound that will happen after all this is said and done. Because there will be a rebound. There always is. But the question is, are you going to be positioned for it? Right? So folks, I appreciate you and value you. This is going to be a really cool ride. At the end of the day, I know that everything's going to work out for those who follow the truth. And for those who don't, it'll still work out. There's no choice but for it to work out. It's a matter of which path do you want to take, right? So folks, just be honest, be truthful to yourselves, love on your family, love on each other. And, as these things start to come to fruition, start reading more, start getting connected more to the earth, start getting connected more to yourself. Look within for the answers for a lot of things. Like, this is not the time where people can tell you what's right or wrong anymore. It's not the time. You got to tell yourself what's right and wrong. And folks who ignore themselves and ignore the truth inside of you, you're going to be the ones that are going to feel it the most, because you're preparing yourself for a setup. If I know something to be true and I act against that, then I'm going to be the one that gets the karma for that, because I knew better, right? That's what this is going to be about. This age right now is not about like people pretending to be something that they're not. It's really about those who know who they are to step up and actually be who they are. You want to do a clubhouse tonight? Yeah, I think we can do a clubhouse room. As long as the Chief of Moon room isn't going on, we can do that. We've really met some really dope folks on Clubhouse, and I haven't done a clubhouse room in a while. So y'all, if you're interested, let's do a clubhouse room. We'll do one. We'll do one tonight. I'll load it up for 9:15. So if you're watching this and you're probably late, you might be able to join us on Clubhouse. And if you can't, then it's fine. It's fine. But yeah, we'll talk about prepping. Sounds good, Auntie. Let's do it. Sheena Renee, what's up? Thanks for joining us. Long Tunes, thanks for being around. Johnny Boy, what's going on? NTH LLC 23, what's up? Thanks for joining us. All right, folks. So yeah, hope you guys are good. That's it. We'll see you guys next week. And again, until then, don't forget the simple rule. If things go down and you know that they were a long-term hold, buy more. I don't need to give you any more examples, y'all. Y'all have seen it. Y'all know what I'm talking about. Stop pretending like you don't know. All right, y'all. Peace out. I'll catch you guys next week, yo. Peace.